Hi guys, and welcome back to another episode of Crypto Scoop FM. I'm your host DJ RSC, and every week I come to you with interesting insights, ideas, and stories from the world of crypto. Today I'm joined by a very special guest, my good friend, a researcher and host at the Crypto Banter, Alessandro. Welcome, Alex.
Oh, hey man, how you doing? Oh, am I muted or am I good?
You're good. You're good.
Nice.
Thank you. Thanks for joining in today.
Oh, it's a pleasure, sir. How are you?
I'm doing good. So, guys, we're going to talk about a very important, some say, Alex, one of the most important launches in crypto in a long, long while. And folks are comparing it to, I don't know, Hyperliquid or even Ethereum or Bitcoin for that matter on X.
I really hope not.
And that, guys, is none other than World Liberty Financial, the DeFi protocol backed by the Trump family. So we're going to uncover all of the truths, some rumors around World Liberty Fi, and at the end of this process, we'll try to build our understanding fundamentally of what World Liberty Financial is as a project. And also, I should say at this point in time that nothing that Alex or I say is financial advice, life advice, or legal advice. So if you're going to make any decisions, financial or otherwise, based on this discussion, it's all on you. All right, with that little disclaimer out of the way, let's jump in. Okay, Alex, first I want to start from the very, very top, right? For the naysayers, for folks who are extremely new to the space, they hear the Trump name and they go all crazy, right? We saw what happened to the Trump token. But this time things are different because some folks really believe that World Liberty Financial is a real crypto project. It will be a real business that they're going to run. So I want to start there. I want to understand from you what World Liberty Financial really is before we jump into the token conversations.
Okay, so I mean, World Liberty Fi, right, is the Trumps have this history of launching projects in crypto that are essentially just like slow rugs. If you look at the Trump token or any of the NFTs that the Trumps launched, it's not like people think that they're going to be these breakthrough applications. Kind of people know what they're getting into. They're trying to flip it for a profit, and some people made a lot of money on Trump, but the vast majority of people lost money. Right, it ran to like 75 pip FDV. Kind of crazy, really, when you think about it. But like, what you've got on World Liberty Fi is a attempt at a legitimate project, and the place they see their edge in this market is
too many co-founders. Anyways, please go on.
Well, yeah. I mean, they have like loads of co-founders, but lots of Trumps in that on that list. So obviously they've got like incredibly strong ties. But just like it's a stablecoin project, right? Like, well, Liberty Fi is like the idea is this token will benefit from the distribution of their stablecoin USD1. So the bigger USD1 grows, in theory, the bigger World Liberty Fi, the actual underlying token, can go. And so the bet on World Liberty Fi is a bet that you think that the Trump name and the distribution channels that they have, they can get this USD1 stablecoin distributed in enough places with some kind of like revenue model, whether that's just via taking the USD and earning treasury yield off the back of it, or maybe some other intricate DeFi strategies. But it's a play on USD1 getting adoption and distribution, and they think that their edge is that Tether is not regulated in the US for the most part. It's not audited. It doesn't really meet the Genius Act legislation that it needs to. As a result of that, Tether are actually launching a separate stablecoin, supposedly, which abides by all the Genius Act regulations and rules. So, maybe they will have that distribution in the US still anyway. But they think that Tether haven't got that distribution in the US. That they think that they can sort of like get in from that perspective, and they also think that Circle, obviously like USDC's stablecoin, pay too much money to Coinbase. They distribute way too much of their revenue. If you don't know, Circle distribute around about 56-ish%, call it 50% of their revenues to Coinbase for distribution purposes. So any USDC that's on Coinbase, Circle don't earn any of the treasury yields on that. That goes to Coinbase, and a few other things that basically mean that for every roughly 100 basis point drop in the Fed funds rate, Circle are losing $20 billion in revenue on that on the first 100 bips, and I think it's close to like 40 to 50 bill in revenue on the second 100 bips. So like that's where they think that their USP, I guess, comes in from. They think that Circle give away too much of their revenue, and they think that Tether are just not regulated in the US, so they can sort of like fit in this little gap and actually capture a lot of that free yield, basically, that is A, going to Coinbase, and B, not being captured by Tether. So that's where they think that's what they think the use of USD1 is going to be.
Okay. There was also this news that 7%, I don't know if this is true, I guess it was a rumor, but not sure yet. So just to confirm, that 7% of the World Liberty Fi supply was given to Aave, because they have somehow forked Aave to use that as a lending protocol for TradFi use cases. Is that true? Is there any element of truth to the statement? And how do you see that as an extension of the stablecoin play? Because we already have deeply entrenched, DeFi lending protocols already out there.
So I think Aave are getting like 7% of the supply. This, again, a lot of these things are unknown on the specifics, and whether or not Aave actually do end up getting this portion of the supply. There's been rumors that have come out that said that they won't, and then people saying that they will. So I guess the launch is today, right? So we'll find out a lot more after the launch today. But as far as I'm aware, there was a proposal a while ago, and in that proposal, World Liberty Fi basically said, look, Aave are going to get 7% of these tokens. That was done in a sort of like what World Liberty Fi did initially, actually. When they initially raised, they struggled to fill their ICO allocation. They were raising it about 0.015 cents. Obviously, it's trading at like, close to 30 to 33 cents at the moment. So massive cook for the guys that got in there. That struggled to fill initially. But what they were doing with different protocols is they were doing like token swaps. They were like, okay, you give us, $100 million of Aave tokens, and we'll give you, 1 or 2% of the token supply. In the Aave deal, they got a bunch of Aave, and in return, they gave Aave 7% of the World Liberty Fi of the total token supply, plus like a 20% supposedly protocol fee distribution. So Aave will get 20% of the protocol fees that are generated from World Liberty Fi.
Is the Aave token pricing in this 7%?
Yeah, I mean,
what do you think?
Probably. I mean, Aave. Where's Aave now? I think Aave's done over the last month. Let me open the Aave chart a minute. But over the last month, I think Aave has done quite well, I guess. I did think that it hadn't quite priced it in per se, but
yeah.
Where is it now?
Last month would be from August. I think from August it is up almost. Let me see, 40%.
Yeah. So I think probably that is priced in for the most part. Like it's up what from the low at the start of August, 26%. So like the market's been relatively flat in August, I guess. Essentially, if they're getting 7% of the supply at 33 bill, that's $2-ish billion. So they're adding $2 billion to their treasury, which is pretty substantial. And Aave trading at what are they trading at in terms of their FDV? 4.7. So yeah, I mean, if they're adding $2 billion, it's not liquid though, so not quite the same. But yeah, arguably, I think for the most part, this is kind of priced into Aave. TBC whether or not the revenues on World Liberty Fi is priced in. I expect that probably isn't priced in for the most part, to be honest.
Got it. Okay. Just want to fall back to the stablecoin conversation. We remember how hard Trump was pushing for a Genius bill to get passed in both houses, and then I think he signed it in early August, if I remember. And that's when there was a little euphoria in the markets as well. Given that he is the president, that he has that clout, but at the same time, the way I see the whole stablecoin game unfolding is there's a lot of competition in this space. And you now have companies also coming in and trying to plan their own stable coins. I mean, why would a bank want to leave out any opportunity to make money with this and instead hand it over to Tether, or Circle
Yeah,
or
for
somebody else. So in this kind of a competitive landscape, especially something like America, which has been extremely competitive, especially on the financial industry, do you see that's one of the biggest risks for, like, this is more noise than signal in terms of near-term sentiment for WLFI to do really well, but long-term it might struggle?
Yeah, I think, yeah, it's a good question, to be honest. I think as more and more RWAs, however you see that, like, dollars are essentially RWAs, right? They're just a version of tokenized assets that exist on chain. As more institutions, like traditional banks or whatever, start to tokenize their assets and bring them on chain, the chance that they're going to give up the yield to just like these other companies is low, right? So I don't particularly think that in the longer term we're going to see many of those institutions just happily give up, what is essentially all of their revenue, for the most, like a decent chunk of their revenue in terms of earning yield on the assets that they have, to random players just to exist on chain. I mean, you've seen Stripe have launched their own chain, right? Tempo, this Circle are launching their own chain. You've got this, like Robinhood are launching their own chain. You've got this pattern now where institutions who have enormous amounts of capital are just launching their own chains, fully in the knowledge that they've already got distribution. I don't think Stripe, for example, with their launch of Tempo, really care whether or not they're going to be getting degens to go and deposit their stables to earn 5% yield, right? They just know that, okay, we've got hundreds of thousands of customers that already use Stripe infrastructure. All we need to do is keep those customers. Yes, we can potentially put those dollars on chain, but we don't need to tie into Ethereum for that. We can just create our own chain, whatever it is, make sure it's secure. We hold all the validators, the whole validator set. It can be fully permissioned, and we just want to make our users. We just want to give our users a more streamlined version of the product that already exists. Like, if it didn't improve their product suite, they wouldn't do it. Yeah. The reality is, putting things on chain, bringing financial rails and putting them on chain, does actually improve the experience from a UX perspective if it can be done right. It's just about trying to get that done right in a way that is beneficial to their customer base. And they don't care if that exists on Ethereum or not. That's why they're launching their own chain.
Wonderful. Okay, the next question, and I'm not going to dive into tokenomics too much for sure, even I don't know much about it. But I'm curious because I saw this tweet, and I don't know if this is indeed true, but it says that World Liberty Financial actually has no financial incentives to hold. Like, there is no dividends, there is no buybacks, or any kind of value accrual. It's mostly a governance token, right? And now one big meta that Alex, both you and I have been closely observing over the last couple of months now is this idea that projects are generating a ton of revenue through real world productivity, and using that revenue to buy back their tokens and then create value creation for the holders, or even in the form of staking or other forms. So Hyperliquid is a great example of that. Pump is trying to do that. Bonk tried to do that, but I don't know where it is now. It's totally dead. But how do you see this play out? Because that is the narrative right now. So if the only value proposition of the token is governance, even if the stablecoin becomes really big, and there is no clear action plan to drive value back to WLFI, that seems a little troubling to me. But curious about your thoughts.
I think the idea that revenue generation is like a meta is kind of funny when you think about it. Like, crypto has this idea that protocols that are making money is just a narrative that's hot at the moment. It's like, no, businesses are the only thing that matter. So essentially, a lot of the tokens that you've just spoken about, right? Like, whether it's Hype, these things are just businesses that have decided to launch their business on chain. And obviously, if you launch a business, the only thing that your business needs to be able to do is turn a profit. Now, I don't necessarily think that the only crypto projects that can exist that have already been available are ones with buybacks. But what you need is some amount of the token supply to be constantly bid by something, whether that's a treasury company, whether that's an ETF. You need some underlying requirement for people to go out there and actually bid the token for just for token price to generally do better, right? And especially with something like World Liberty Fi, you've got it launching at like an enormous valuation, 30-ish billion dollars, relatively low float. The exact figures on the float are slightly unknown. Just on that, like people thought that only 5% was going to be circulating just this morning, and it was trading at 40 bill. And then Coin Market Cap came out and said, actually, no, we're going to have 25-ish% circulating.
Yeah.
Token dropped by 25% off that news. I just saw like a minute ago, actually, Coin Market Cap thing is wrong. So, and it's only going to be 8% circulating. So the actual exact figures are still kind of unknown. Fundamentally, tokens do need some value accrual mechanism. And I think this is just going to be whatever happens over the next few days, few weeks. This is just going to be another one of those super low float, high FTV tokens that casually just like bleeds out, right? And it makes sense for them to do it in this way. Again, not financial advice. You can do whatever you want, but this is probably how I think what's going to. I don't particularly think that this can trade at the 10th largest project in crypto. Unless, they actually do get enormous distribution. But even if they get enormous distribution...
Just to pause you for a second, when you said the top 10 projects, are we talking about by FTV or by the...
By FTV, yeah, exactly, by FTV, right? So for it to remain there, the token price needs to stay the same, right? So as more tokens become unlocked, this is the issue with high FTV, low token projects, is that they can start high, but for anybody buying the token, essentially they're just subsidizing the unlocks that are coming, and the unlocks that are coming are just supply side pressure that want to push the price down because early investors have got their tokens now, they want to take profit on them, and in the case of World Liberty Fi, people got in it 1.5 cents. So these guys are up 20-ish x, and 20-ish x on very large positions. People bought 100k, 500k of this. They're sitting on enormous profits, and absolutely they need to sell those to realize those profits. So I think it probably does, it's going to be hard for it to not have that standard, just sort of looks like a slow rug chart, just gradually bleeding out as unlocks happen, and there's just a lot of supply side pressure. Especially if there is no underlying bid, no value accrual back to the token, no buyback, no whatever. There is this alt 5 treasury company, so maybe that's going to consistently have some level of bid. And there are all of these weird, Trump based kind of behind the scene deals, right? We saw the CRO deal the other day. If you don't know about that, so CRO and Trump Media had a deal a few days ago that saw the CRO price jump 50%. CRO and Trump Media basically did a token exchange. Some got equity in the company for some tokens, and anyway, there are these backroom deals that definitely can happen that can push price in the short term, but I definitely struggle to see how it's going to. I mean, this is more valuable than Aave at the moment, by a considerable margin in terms of FTV, and they're giving Aave a bunch of their revenue. So, something doesn't quite add up.
Yeah, and Aave is actually killing it with their TVL, killing it with their growth. So you actually have a history of performance, and here you have somebody who I don't even know why they gave away so much, such a large supply to them simply to just fork the.
Yeah, basically.
That was crazy, bro.
Yeah, it's odd. It's odd. I think they basically really wanted obviously they really wanted the code base to be highly secure, and Aave has proven, I guess, just by virtue of the fact that it has so much TVL and hasn't been hacked. That it has got a very, very secure code base. So I think that part of the deal was that they utilized some of the Aave devs alongside it as well, just to vet the code to make sure that it was unlikely to be hacked and good from that perspective. But still, it was an odd one, to be honest, that they gave away so much to Aave.
Yeah, one fear that folks have now is if you remember when the Trump token was launched. Right, that was December of 24, if I'm not wrong, or somewhere around that point. After that, the entire liquidity of the Solana ecosystem, not just Solana, the crypto ecosystem, was sucked by this one big whale, right? And that was the start of things going southward for the entire crypto market, and we entered into another lull. That is also a fear that I see a lot of folks talking about. Do you feel that? Do you think this is a cycle top indicator?
I'm not sure really. I mean, the craze. I don't see too many euphoric things going on right now. Not to say that this couldn't be a cycle top. I don't particularly see this as necessarily a cycle top indicator per se, like this particular launch. And I know it's launching at a very, very high FTV. I don't particularly see this launch as being like a cycle top indicator necessarily. I don't think the cycle top's in right now. I mean, maybe we'll be wrong on that in a few months. I definitely think there could be medium-ish term like pullback again. The thing about this cycle is it's been very different to previous cycles. If you just look at well, no, it has, right? If you,
most dangerous
for sure,
statement to make. But yes,
no,
I agree.
in terms of like if you just look at the Bitcoin price action, it's just been like this sort of like laddered steps up. It's been like a kind of flat.
Yeah.
Ladders up, stays kind of flat, ladders up, stays kind of flat, ladders up. And if you look at like volatility in terms of, so if you just look at Bitcoin volatility this cycle, it's not been like previous cycles. There's been periods of really extreme lows in volatility and then just like spikes. And I know that does seem like it sounds like normal behavior, but it's been almost like structured in this way. I don't necessarily think that means the cycle necessarily plays on for ad infinitum, right? But there has been different things like the there was a cycle that there was a Bitcoin high Bitcoin broke all-time high pre-halving. We've seen this sort of like structural difference in terms of how Bitcoin's been breaking above its trading ranges. Both these things are different, so there's like actual difference that can be observed. Whether that plays out in differences in terms of overall cycles, TBC. But anyway, I think probably it doesn't. But I don't think the cycle's it tops in now. I think there probably is like one more cycle, one more sort of like run, and maybe it's Q1 26, or maybe it's Q2 26, or maybe it's Q4 25. But in that kind of range, one way that wrecks the most people is probably the most likely thing to happen.
Amazing. Okay, so we spoke about what WLFI is. We understood the stablecoin game. We've also spoken about how this may not be that cycle top indicator, hopefully. And now I want to bring our discussion to the end and talk about if you wanted to play this bet, the WLFI token bet, what would be the best risk-adjusted way of playing this out? Like, is this more on the perp side with very low leverage, isolated margin, or should we like DCA or wait for how this chart plays out? Because all we have so far is pre-market price action. But when it actually goes and less, we'll actually see how it plays. What would be your advice to investors sitting on the sidelines looking at the WLFI chart right now?
I mean, I definitely wouldn't be buying this.
Won't be buying.
I wouldn't buy this. I wouldn't buy this, or I wouldn't short this personally. I think it's really hard. It's really hard to win with something like this because it's already trading quite high valuations. So would
you feel let down if it does the same thing that Trump token did, like up hourly?
Well, no, because like the thing is like, so you have to ask whenever you're going to go trade something, you have to like think about what is your expected returns, right? What are you hoping to get at the best case scenario, worst case scenario? Whether if your thesis is right, what's going to happen? If your thesis is wrong, what's going to happen? I mean, I might be wrong, right? But personally, this is already trading at 30 bill FDV. I can't see this trading at 70 bill, right? I can't see this reaching Trump token valuations. That seems like just the bouncing ball analogy. They already launched this one thing; it did absolutely crazy. Yeah. I don't think it reaches that. So, like for me anyway, 75 bill is like a ceiling. I don't think it reaches that sort of level.
Okay,
that's like just more than a little bit more than a 2x from here, right? So you're potentially buying something that could have 50 to 75% downside for 100% upside. 100 to 150% upside. That's just not like a risk to reward play I would take personally.
Great. Okay, one thing that I want to talk about very quickly before we wrap up is the Alt5 token. Sorry, not the the stock, right? And we've seen the digital asset treasury narrative play out in the last couple of months now in crypto. We saw how PMNR shot up, SBET shot up before closing down. And I think they're trading very close to their NAVs right now. And so you have Alt5, probably the single largest holder of WLFI tokens. Do you see this as an interesting play on the other side of the funnel, or is it?
The play on this, right? The play on Alt5 and WLFI was to arbitrage the difference, and that was available like a week or two ago. the Alt5 had like a certain portion of tokens that were allocated to them, and World Liberty Fi had was trading at a certain price. Essentially, Alt5 were trading underneath their net asset value. So the amount of tokens that Alt5 were holding was worth less than the amount of the value that WLFI was trading at. So the play was to buy Alt5 and then short World Liberty Fi, and just when they began to converge, then you could capture that difference. That arbitrage is basically shut now. It's no longer available. It was available for quite a long time, to be honest. It was available for 2 to sort of 4 weeks, but it gradually has just sort of like it's missed for sure. It's quite hard to like. It wasn't super easy to attain. Yeah. Once the World Liberty Fi perps went live, though, it was like really, really easy to get. The issue is the World Liberty Fi perps have continued to go up, right? So you needed to have enough margin to like cover the fact that your perp position would have got heavily underwater, but the Alt5 position has made up the difference. So yeah, that arbitrage is basically closed now. But that was the play from here. Definitely no, I wouldn't be touching Alt5.
That's amazing. Alex, I'm going to let you go, but I'm going to ask you one last question, a little spicy one. But now a lot of folks say that we're entering that parabolic stage of the cycle, right? The 4-year cycle when things go absolutely crazy and hit the banana zone. Of course, you have at least one rate cut is what the market is expecting, right? So perhaps a lot of it is priced in. We might see another one. Do you think that's enough? And if it is, how can an investor now looking at the market position for capturing a lot of that upside?
I think people have to ask, like, people keep saying about this banana zone coming up soon. What is the expectation of how high things are going to get? Like, SUI is up, 5x in the last 6 months. August 24, it was 5x in the last year, sorry. And from the low, it's up 10x. From like 2 years ago, it's up 10x.
And that with shitty tokenomics.
Yeah, true. Well, yeah. So Sui's done that. Like Hyperliquid was up 25, like hit 25x off the bat. Like fully liquid, you could have got in very easily when it opened. Like these, you've already seen crazy returns on a bunch of different tokens. I don't know what people are hoping for when they're expecting this zone where every token just does ridiculous things.
Yeah, in that squeezed period, you see the majors running like 5x maybe, and then you have the mid caps going 20x, then you have the low caps going like absolutely berserk. That's what they're waiting for.
But it's not in that period they do all of the returns because they've been getting close to their previous highs. That whole time they've been sort of like grinding up relatively close to their maybe previous highs. Maybe they're like 25% away, and then they go from there, right? It's this. The amount of tokens in the market now. It's not the amount of tokens that's the problem. People say, "Oh, there's all these tokens that are launched, and that's why tokens prices can't go up." I don't particularly think that because there's always been a lot of tokens. There was always been tokens that do bad. So that sort of like argument is kind of like made null and void by the fact that there's always tokens every cycle that don't do very well. So you're always like already selecting the tokens that do well as like your barometer for what is and what is not good, right? But the reason a lot of tokens have done so badly this cycle is because we are in the period where their unlocks get bigger and bigger and bigger, and they're getting closer to their fully diluted valuations. And they just can't match those fully diluted valuations because there's just too many tokens in supply now and not enough buy pressure on those particular tokens. So if you look at their market caps, like AVAX's market cap now, not really much different to what it was at the peak, sort of like 50% down, whereas the token price is like 80, 90% down.
Yeah. Okay, fair argument. Does that mean we're in that stage of the cycle where people should have actually, like, they're too late to enter, meaning all of the upside or gains that they had to capture were in the last couple of months or weeks, and now we're in that stage, like stage 3, right, where after that we're going to start seeing things slowly go down?
This is not the time to be applying max risk. Like the best investors and the people who make the most money and keep it, they take risk off when things get heated. They don't put risk on hoping for like things to get really, really heated at the end. That doesn't mean to say that like me personally, I actually am like still heavily overexposed. Because I do think there's going to be I do think that there's still upside in this market, but for really like being fully risk on here when the market is like, this is the sort of, if you think that there's going to be a period of time where things get really crazy, that is absolutely the time to be taking risk off as opposed to putting risk on.
It's interesting because we are yet to see the rate cuts, and you're already sounding the alarm bells.
But like rate cuts aren't bullish in the short to medium term. They take a long time to, and actually, like you have to ask, like, why do rate cuts happen? Rate cuts happen because there's issues in the underlying economy, right? Now, the thing, I guess we could go super deep into rate cuts here, and the thing about, like, if rate cuts do come to, if we see consistent rate cuts over the next 6 to 12 months, and the Fed funds rate comes down from 4 and a bit to 3, low 3s and lower, then yes, risk assets should do very well overall in that environment. But that is a different scenario to what we've seen in crypto previously. So that makes this cycle different, and then maybe it goes on for the next 2 years. That isn't my base case. I'm happy to be wrong on that base case and miss out on like decent upside, but I can't expect that this time is different based upon all the previous times. Now, it might be for sure, and I'll probably keep like a small portion of exposure to the markets over the next, like when I plan on taking most profits, but I don't plan on expecting. I mean, you said yourself earlier, this time probably isn't different. I would say probably it probably isn't different overall.
It probably isn't, but we still have to look at. We should. It's just my personal opinion, of course, no financial advice. But November and December is typically post halving years. We've seen the real magic happen in crypto, and so I think for folks who are just looking at this market very, very early, those are the periods to be extremely careful about, trying to top blast, because that's when real FOMO kicks in. Right now, the Fear and Greed Index has also kind of tapered down a bit because of what's happened. I also feel the rate cut's not there, and the DAT narrative is not yet done. Plus, if I combine that with the ETF buying happening on the other side at least for ETH, like until ETH breaks down, that's the clear signal for me that, okay, things are pretty much down and it's time to move off risk on assets and try to move into stables or something more,
What is ETH breaking down to you? What do you see that as?
ETH breaking down meaning the price of the ETH curve goes down consistently, volumes start declining, DATs are no longer buying, the MNAVs have flipped.
The MNAVs are pretty bad though. Sorry? The MNAVs went negative on Friday.
And Tom Lee no longer comes to CNBC giving his crazy price predictions. So those would be top cycle indicators for me, which I am not yet seeing. But it's good to hear your side of the story as well.
Yeah, I mean, my base case is that we are, whatever happens, the market will wreck the most amount of people, right? So the expectation September's going to be red. There's going to be some massive blow off top in Q4, and everyone's going to walk away really rich. It's like very unlikely that's going to happen. Agreed. I wouldn't be surprised if something happened like the next 2 to 3 months were really quite horrible holds, just like gradual slow bleeds on most things. Then in Q1, there's like this rally that everyone begins to fake because they think it's false. It does quite well, maybe makes new highs, everyone foams in at the highs, and then actually that is the end of the cycle, and then everyone's wrecked twice because they sold at the bottom, bought at the highs. Perfect.
Wonderful. Okay, with that, I'm going to bring this conversation to an end, guys, because Alex has to run. But Alex, if the community wants to chat with you, talk to you, where can they find you?
Oh, yeah, sure. So I've got I run shows on Banter's YouTube channel. They're always live on Saturdays and Sundays, so go check those out if you want to see my deep dives into different projects. And then otherwise, you can find me on Twitter if you want. I don't really use Twitter too much, but JPEG Curator. I used to trade a lot of NFTs.
Wonderful. Wonderful. Thank you, Alex, so much for coming in. I'm sure the community would have enjoyed your insights quite a bit.
It's a pleasure, man. Thanks for having me. I appreciate it.